Hey, what's up guys? John here. Bank of America just reported $131.6 billion in unrealized losses yesterday.
Bank of America, one of the worst performing bank stocks this year, down about 17%.
Those amounted to $131 billion in unrealized losses.
JP Morgan Chase sitting on over $40 billion in losses. The U.S. banking system is sitting on roughly $1.8 trillion in losses. And what's ultimately going to happen in the very near future is we're going to start to see, I believe, bank runs and a lot of people taking a lot of trust they had in the system out of the system. People are going to start to make different decisions because people are going to be very, very skeptical of what the future is going to look like and just how stable these financial institutions really are. I'm going to break down the facts and show you what's going on. Please hit the like button. When you hit the like button, YouTube's going to share this content to educate other people about what's really going on. And if you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com for a free strategy session. Take a look at this. So Bank of America warned consumers they would be pushed to the point of pain, and CEO Brian Moynihan says we've now reached that point. Our message is now echoing in every corner of Wall Street. Consumers have finally run out of steam. It is also eventually that Bank of America has predicted since March when an analyst warned that the Fed would push consumers to the point of pain in order to tame inflation. And now, according to Bank of America's CEO, the time has come. Well, look at what's happening, Bank of America. Bank of America unrealized losses on securities rose to $131.6 billion. $131.6 billion. Bank of America reported unrealized losses on this amount on securities in the third quarter, growing from the second quarter, but the bank does not expect the portfolio will generate actual losses. That's what Silicon Valley Bank thought also. Silicon Valley Bank thought that, and then there was a run on the bank and they were forced to sell, and that forced them to go under. And this is exactly what they're saying. Analysts say it is highly unlikely Bank of America would sell the securities at a loss because the lender has strong liquidity with consumer deposits and higher capital. Keeping securities up until maturity also gives it the flexibility to avert mark-to-market losses. Well, people start pulling money out of the banks, which they are doing now. Ken Griffin, number one most successful hedge fund manager in the world, he said consumers have an estimated $1 trillion in excess savings left over, but spending upwards of $100 billion every single month, Griffin said. Well, when did he say this? March. So by the end of the year, this leaves them on track to exhaust their pandemic course by the end in a matter of months, right around now. So you think about this. Student loans, 43.5 million borrowers had to start paying October 1st. So what's going to happen? The bank deposits are going to continue to run dry. As we walk into the holiday season. And this is going to push a lot of problems onto the banks. JP Morgan Chase losses hit $40 billion. Bank of America should be more, right? Well, look at what's going on with JP Morgan Chase. Goldman Sachs has marked down or impaired office holdings down by 50%. Bank of America is asking about offices in Goldman's commercial real estate unit. He has heard right when Coleman will describe a 50% markdown. That's right, the firm either marked or impaired office holdings by 50%. That's quite significant. These losses are starting to skyrocket. Doesn't matter if you're a small regional bank, doesn't matter if you're a big bank. These losses, they're coming for the entire banking system. And even regulators right now, banking regulator Sam Woods, this is the most intense period since the 2008 great financial crisis. I mean, 1.7 trillion in unrealized losses? It's not a problem until it is. We're walking into a very, very big problem, and it's going to happen. It's already starting. Like, here's a good example of this. August 10th, U.S. foreclosure activity dipped in July, right? This is August 10th, it dipped. Well, foreclosures are rising. Here's what experts say it means for the housing market, right? They said this, and this came out August 19th. So you just look at this. 9 days later, from August 9th to August 19th, recessions or foreclosures dipped, then they started increasing. Yet, while lender repossessions continue to climb. So you're starting to see a unique situation unfolding across the housing market now. Foreclosures are picking up. Across credit card delinquencies are starting to pick up. Across auto loans, everything is starting to make sense. Banks, financial institutions, lending providers, they are going to be walking into a series of losses coming very, very soon. So the big question is, if our entire financial system is based on lending money to consumers and lending it into existence, and consumers are pushed to the brink of financial collapse, most of them. I mean, look at the numbers. 2 out of 3 Americans can't afford a $400 expense. What is this going to mean? We're just going to start seeing one default after the next over the next 3 to 6 to 12 months. So this is going to be very, very bad news for banks. And when some of the biggest banks like Bank of America sitting on over $130 billion in losses in their backup plan is that they are going to have consumer deposits. Where are they going to have these deposits when consumer savings rates are at all-time lows? They're not. This is going to completely change, I believe, the entire economy. And I think a lot of people don't yet realize that. I think what we're going to start to see is a lot of private lenders coming out trying to fill this void. We're going to start to see a lot of predatory loans start to come out. We're going to start to see so much change unravel in this economy as banks start to brace for this impact. I mean, this is like the Titanic about to hit the iceberg. This is absolutely insane. But I think, we look back in 2008, 2009, that situation pales in comparison to the problem that we're walking into now. That situation was mainly a banking, lending, and real estate crisis. We're walking into a situation where we have Russia and Ukraine, we have Israel and Hamas, we have all these problems with oil, we have all of the entire restructuring of the entire economy unfolding, not specifically in the banking sector, but you look at this clean energy transition, one thing after the next, and all of which are bigger than what happened in 2008, happening at a time with $17 trillion in outstanding consumer debt and interest rates being much higher for longer. We're walking into a world of change, a world of hurt, and a world of opportunity for the smart and savvy entrepreneur and investor that's planning in advance right now for what is coming. Banks use the held-to-maturity destination to buy less risky securities to give them the downside protection, even though in a rising interest rate environment, there's very limited upside potential. All of these unrealized losses are on government-guaranteed securities. Bank of America Chief Financial Officer told reporters on a conference call discussing third quarter earnings, because we're holding them to maturity, we will anticipate we will have zero losses over time. Bank of America reported $106 billion in paper losses in the second quarter. Bank of America, the second biggest U.S. lender, at about $603 billion held to maturity securities, and it said in filing Tuesday, shrinking from $614 billion in the second quarter. And yet the holdings of low yield assets have also constrained the second largest U.S. lender's ability to make higher profit for deploying its cash in money markets or other assets with greater returns. The bank has one of the lower overall yields on securities. The big question becomes, if they're going to be losing money on all of their loans, auto loans, home loans, personal loans, everything, commercial real estate is going to be a devastating problem. If they're going to be losing money on all their loans, and their deposits are going to continue to diminish, and the investments, these bonds, everything that they're investing in, they're performing poorly, how are they going to be able to withstand these interest payments on all of the loans in which they're not being paid for? How are they going to be able to withstand all these problems? I personally don't think it's possible. I think they're going to have to get some really, really big bailouts from the government. I think that's what's going to happen. We're going to start to see a lot of consolidation, because if these are the problems that a big bank like Bank of America is going through, you could only imagine what the regional banks are going through, because the regional banks, they are the banks that generally lend to the mom and pop businesses and to the everyday American. The everyday American is getting hit harder than ever before. So what I believe we're going to start walking into is regional banks start to fall, some consolidation in the bigger banks, and a complete restructuring of freedom and capitalism in America. I believe this is happening. It's been in the works for a little while now, and I think we're sitting front row for this insane movie that's about to take place. What do you think about this entire situation? Do you think they're walking into a situation where Bank of America could walk into a bailout, or we could start to see consolidation of banks? Or do you think that this $131 billion is not that big of a deal for Bank of America? The fact that consumers are running out of money and JP Morgan sitting on $40 billion in losses, and the U.S. banking system sitting on $1.7 trillion in unrealized losses. Do you think this is a problem, or do you think that we're going to walk into a big transition? Drop your comments below. We'll have a conversation about this. I'm trying to troubleshoot this problem and see what we could be missing. Where could we be wrong? I don't see a way in which we're wrong. The only way in which this could happen is if interest rates continue to drop. Let's say, for example, they started to decline, their lending activity started to pick up, but even that, people can't afford life. Everything is too expensive. Everything is very, very expensive. There's very little, I don't see very, very easy transition. I don't see it. I see a big problem in the banking system. I'm curious what you see. Drop below. We'll have a conversation about it. If you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, we'd love to help you. We'd love to give you a free strategy session at my company, GreatCreditFast.com. That's GreatCreditFast.com. You can click the link in the description below this video, and I'll catch you guys in the next one.